right, good morning. Today is January 10th, 2024, and I'm back with another edition of the live show and just got everything set up in the nick of time. So hopefully y'all be able to be tuned in here because I had a little technical issue right at the beginning of getting the show prepared. So, as you know, you have to refresh you have to refresh the show page there if if you don't get it right off the bat. So anyways, so today's January 10th and the next couple of days are going to be extremely important for the market because we have the numbers coming out for the CPI and PPI, the inflation numbers, which everything seems to be based these days on when the Fed's going to cut rates and how much they're going to cut rates and all this and how many rate hikes are priced in, and everybody's guessing different numbers in that. I think I saw this morning that one of the big firms was expecting three. I think the market's pricing in more than that. So, but anyway, it's kind of odd that that's where we find ourselves, is that everything is dependent on, the funny thing, I've got like the 2-year chart up here because I moved this resistance level. There was a resistance level that the market spent a lot of time trying to get through at a lower level, and it's really no longer relevant on the chart. So the big resistance level, market's trying to push into it right now, is of course the old all-time high in the history of the world, and we're within spitting distance of it, right? So this is the big giant proverbial cup and handle that I talked about a lot last year as it was forming, quite frankly. You know, despite despite common sense and everything, that if you overthink it, despite common sense, the market was actually able to push higher, right? And so even with interest rates going up, see, that was the whole big thing, is everybody was worried about rising interest rates hurting stocks. And so, we got all these rallies. Even in 2022, we had rallies, and a lot in 2023, rallies based on the idea that, the Fed was going to pivot and they were going to start cutting rates, right? And it was kind of ridiculous because all the Fed has done is just raise rates, raise rates, raise rates, and the market, continued higher anyway. And so, in the back of my mind, and I know you've seen this before, in theory, when the Fed starts embarking on cutting rates, that's when the market typically goes down, and with good reason, because the Fed normally, under normal circumstances, cuts rates when the economy is doing poorly, and there's a recession. That's when they cut rates. So, I think one of the rating agencies came out this morning and said no, that they were not expecting a recession in 2024. And if I'm not mistaken, it was the same rating agency that expected a recession last year. So it's going to be interesting to see how this all plays out. But it's kind of ridiculous that everything hinges on what the Fed's going to do, and the whole rate cut thing. And so the rate hikes, back in the old days, I remember previous cycles when the market would sell off, like you'd have a big down day based on the perception that the Fed was going to hike rates, or cut back on their stimulus, that type of thing. So, yeah, it's a topsy-turvy sort of inverse type of thinking. What makes sense in the market is not typically what happens a lot of times. So I've looked through a lot of charts, and I've seen a lot of stocks that have had these huge run-ups, and this whole repricing since November, to me, is a little suspect, and especially with a lot of individual stocks that you see that basically just took off in November and just did like the S&P here, just went straight up. One that comes to mind is J.P. Morgan, right? Like this move since the bottom here in November. Basically, I don't know what angle that is, but it's more than 45 degrees. I guess even if you zoom the chart out like that, I guess if you wanted to make it a 45-degree angle, you'd have to look at it right from the low. But these type of moves are just, I'm trying to think of what comes to mind is, and this is, I mean, there's just tons of these things. So um, let's take a look at ARK. ARK has always been my sort of proxy for, it's my proxy for high momentum, high growth stocks, speculative type of things, risk on, risk off, that type of thing. And so, you got the same kind of move in ARK, which is a huge basket of different stocks. But anyway, it seems to me that a lot of that was sort of year end. I'm not going to say manipulation, but year end type of positioning by institutions so that people would get their bonuses, right? And that type of thing, and so that that combined with the short squeeze. So um, the sentiment, the sentiment from the peak in the summer into November, over these couple of months, as you can see, the sentiment got pretty terrible. I mean, it was we got down into like extreme fear and all that type of thing, and then there was probably a lot of shorts in the market, and so it just seems like an engineered sort of a short squeeze, just an engineered rally and short squeeze, and quite frankly, just about every sector is kind of overbought, and you can see what's happening here. Um, a lot of the mega cap names and the big names and big companies are holding up really well near the highs, while under the surface you're starting to see some of these more speculative stocks like starting to give some of it back. So, and then earnings season, of course, is gearing up, right? Earnings season basically, I think, starts next week or whatever, and so it's going to be interesting to see how things play out, because we're in a period of time, and there's been lots of periods of time where the economic number, like bad economic numbers, are good for the market, and good economic numbers are not bad, and so, and then of course there's all the revisions of economic numbers. And so everything's just kind of weird right now, and it's really difficult to find individual stocks that look like buys at this point in time. To be honest with you, um, the market needs sort of well, we'll see what happens. I mean, after the next 2 days here, next week. This week is kind of, last week it was a 4-day week, and of course next week is a 4-day week because the market's closed on Monday for Martin Luther King Day. So every start to the year is always kind of odd, but let's take a look at the Russell here on a weekly chart. There we go. Actually, I have. Let me find my chart of the IWM here that's already marked up. Yeah, so interestingly enough here, you can see all the zones and levels and all that, and I got this thing going all the way back to basically to, well, not quite there we go. There's the pandemic. This is a pretty good view here. And of course, the small caps, they come in and out of favor, and sort of like ARK, their small caps are a decent proxy for animal spirits and speculative behavior and that type of thing. And so you can see the same thing here. Um, it basically, the IWM, the small caps, went from a 52-week low, practically a low, to a high. And so you can see the zigzag sort of channeling pattern here. And look at what's happening now. I mean, it just come back down and filled that gap for one thing. And it's kind of broken down below this support level. So this is going to be one to keep an eye on here because, one of two things are going to happen. When you see this thing start to, you see like, kind of a mountain peak, peaks and valleys, but when you see that spike high, like the pivot high, or even a high put in and it turns, it tends to, work its way all the way back down to the lower end of the range. And so it's in kind of a critical spot right now because there was that gap right there, right? So there was that gap which got filled. Um, Interestingly enough, this rally, there was like two or three. Well, there was that huge gap right there, and then there was two really long range days in a gap. So about four or so days accounted for the majority of that. But the speed in which this thing runs up and runs down is pretty incredible. So, it's going to sort of stall out here, and one of two things is going to happen. It's going to start breaking lower and work its way back down towards the mid-range first. So you can see on some of these attempts that the Russell 2000, like this attempt here, it didn't go straight to from the bottom to the top on a couple of these. There's always some pauses in between. So I'd keep an eye on this because this is kind of the important thing. Now, of course, there's the magnificent 6 or 7 stocks or whatever that's really sort of the proxy for everything, and the semiconductors. There you go, the semiconductor ETF, same sort of thing. You got like a big cup and handle here, and interestingly enough, is the handle's like over here, right? Really powerful sort of patterns, I guess. I remember one of the first books I ever read on technical analysis was William O'Neill's book, and he was really big into the cup and handle pattern, and so I spoke about that quite a bit last year as far as the cup and handle shaping up on the S&P, regardless of the fact I was skeptical on whether it would play out or not, because all the negative stuff out there. But you can see the semiconductors, which typically are like the market leaders, right? It's a technology-based economy, and so semiconductors something to keep an eye on. But anyway, that's a heck of a technical pattern there. And so at this point, they look like they're kind of consolidating at new highs, which would make sense. Look at that on a weekly chart, see what it looks like. Yeah, it's even more impressive on a weekly chart, to be honest with you. It's like a textbook sort of cup and handle, right? And it broke out from it, and so I'd keep an eye on that. The thing of it is that Nvidia. Just look at this breakout. This is a weekly chart of Nvidia, right? And the funny thing is at the beginning of 2023. I mean, look at 2022. Nvidia was not the greatest. Didn't have the greatest performance in 2022. I mean, it's a beautiful pattern, right? I mean, it's got everything, but 2023 was just absolutely amazing for Nvidia. And then of course, this was an earnings release, but a lot of these stocks based on, go to a daily chart here, because you can see there was a little dip, kind of like the overall market had, and then they're just continuing to snap this up. Just continued buyers. So this is kind of interesting. I've read a lot of negative stuff, but my point I was trying to make is that so many stocks right now are historically overvalued compared to, their normal valuations, right? And so that's kind of makes you wary. So the idea that I was going to mention earlier is that there's so many of these stocks that you look back on the chart and you think, how could it possibly, and this is just, obviously the NASDAQ 100, but you look at individual stocks and you think, how could the valuations have changed that much in such a short amount of time? I mean, and it's kind of and so, the more I think about it, the more it is a liquidity type, like they call it plumbing of the market type of thing, more so than individual stocks, right? Um, you can only evaluate a stock so much based on based on like individual metrics because the whole rising tide lifts all boats has really come into play, I think, in the past couple of months. And so the valuations on these stocks and the fact that they've just had incredible moves since November makes me a little bit skeptical. It really does about whether it can just keep pushing higher. So, and then of course, there's talked about this a few times last year. The zero DTE, days to expiration options, are kind of added a whole different sort of weird dynamic to the market itself. And so it's been kind of a one-way type of thing where every time the market, takes a dip or whatever intraday, it seems like anytime the market dips, a bunch of options buyers go in and bet that it's going to rally from there. And so it's I watch the intraday action a lot, and what I see is that at some point, during the day, sometimes it's in the morning, sometimes it's midday, but whenever the market kind of takes an intraday dip, I think what happens is everybody tries to sort of pick the bottom and say, okay, well that looks like, we've had a little bit of a sell-off, that looks like the low for the day, and so they go in and they rush and they buy a bunch of calls, and by virtue of that, the market makers have to, offset that. And so basically what the options players are doing, the zero DTE options players are kind of driving the market. And so when they all decide to jump in and buy a bunch of calls, just by virtue of that, it sends the market up, right? And so here's what I'm thinking is that at some point when that reverses, I think that's when we'll see a fairly significant sell-off. Technically speaking, the market itself is constructive. It's kind of interesting to me that we've seen this little dip, like right at the beginning of the year. The volume was kind of low, and we had a 4-day week and that type of thing. And so we saw like this little tiny minor dip, and then this week it seems like they're buying it back. Like Monday was a huge up day. I think like, over 1.25% or something. They just, so it was a significant up day, kind of for no reason. So a lot of weird stuff going on. Last night, you heard about the Bitcoin thing, right? The SEC got hacked, or I should say, their Twitter account got hacked, and so there was an announcement they had approved the Bitcoin ETF when in fact they didn't, and so it's kind of a joke, but it's something. Anyway, real quick, I wanted to look at oil because this is what I was talking about before. Contrary to what would make sense, right? With all the turmoil in the Middle East and all the shipping stuff and the Red Sea and all that good stuff, right? The price of oil is just kind of languishing around $70, which seems like a pretty good deal compared to where it could be. So there's the weekly chart of oil, and quite frankly, this is probably oil's probably one of the main things that is going to end up driving inflation. And so I quite honestly, I don't follow all the news about oil that much, but it's just amazing to me to see that the price of oil is back where it was in 2021, right? I mean, a few years ago. Well, it's a little bit higher than it was this time, 3 years ago, but 2.5 years ago. So, 70, $75 a barrel seems to be a pretty good equilibrium price. And so I think that I saw there's a lot of production out there, but with all the turmoil in the Middle East, it just seems kind of weird. Here's the other interesting thing is that the price of oil is kind of moving inverse to the market, right? Like it had this run up over the summer, and then it started coming down, and it's just so the market did the same thing. The market actually peaked in the summer and had a pullback. At the same time, oil rallied, and then of course, in November, the market rallied back to the highs, but oil's just kind of hanging right around this. Well, I guess this would be the 200-week moving average, which seems to be a pretty good support level for it. So if you look at this 200-week moving average, I mean, you got to go back to the pandemic for oil to be significantly below that. So, and then there's the whole strategic petroleum reserve thing and all that. So anyway, with the price of oil having come down considerably, right? And basically it's lower than it was a year ago. That's probably going to help the inflation numbers. The thing about the inflation numbers is that nobody really trusts or believes them, right? I mean, I can't. I'm gonna say I can remember at least like 3 times, maybe 4 times over a long period of time that they've changed the way that CPI is calculated. And so, and of course, the Fed uses their core CPI, all that stuff. But the fact of the matter is that, unfortunately, prices are sticky. And so all the inflation, I always say this every week just about, the inflation damage has already been done. And so even if the rate of inflation, dropped to zero, we're stuck with paying a lot more for everything than we did, back in the day. So it's gonna, the only thing that's gonna probably, and that's what they are the most afraid of, is deflation. Like um, economists don't want prices to come down, right? Home prices, I guess. I don't know. Everything about home prices is location, but it's kind of ridiculous. All this money, all the money supply that was created, during the pandemic, all these years later, several years later, it resulted in inflation, just as the definition of inflation back in the old days, anyways, was an increase in the money supply, and rising prices was a result of that. And so I know that everybody working at the Fed is an economist, and so you would think that it just blows my mind that they thought that they could do what they did, throw trillions of dollars out there, drop interest rates to zero. Um, I mean, it was like they went they went all in like it was the end of the world at the pandemic, and then so now we're sort of paying the price for it. So anyway, the cost of living's been rising my whole life. So the question is, sort of based on the numbers, I don't see, and a lot of people don't see any reason that they should be lowering rates, right? And so that's a whole nother conversation, but everything is going to hinge on, when they're going to lower rates, and I mean that's basically what the market is kind of betting the farm on, is when the Fed is going to lower rates, and by how much and how many times. And so I don't know. I mean, there's I don't want to get into all this because I'm running out of time here, but there's some political motivation there, right? There's lots of things going on under the surface and behind the scenes that are not so good. Just a lot of craziness, to be honest with you. Um, the market up here at the highs kind of makes me nervous. I guess we'll have to see what earnings season looks like, but this could be one of those earnings seasons where you see lots of you see lots of blow-ups, right? I've been reading about companies laying off employees and that type of thing. Even the big companies laying off employees. So um, this could be the year that this could be the year that we have an economic slowdown, and quite frankly, that would give the Fed cover for lowering rates, right? So it'll be interesting to see. The next couple of days are important. We got to see what the inflation numbers look like. My guess is they'll be right in line. Um, but every time one of these number and important numbers comes out, there's always something under the surface that the headline number always looks good or reasonable, or typically does, and it has recently. The headline number looks great, right? And then you dig under the surface, and there's something that's like completely wacky that throws it off and makes you a little suspect about it. So, as far as the market goes, it makes perfect sense. We're looking at a weekly chart of the S&P, right up against the old highs, but I'll leave you with this. For the market to if what you want is an inflation adjusted all-time high, I mean it was almost exactly 2 years ago the market hit this all-time high, and so it's inflation adjusted just based on the CPI. The S&P needs to be at almost 5,300 to have the same purchasing power as it did right there. Think about that. I mean, geez, that's we're only talking 2 years here, right? But you can try it for yourself. Go to the CPI inflation calculator and type in 4818, which was the intraday high over here, and it'll tell you, $4,818 in January of 2022 is equal to, 5275 or whatever it is, close to 5300 now. So it all boils down to purchasing power. It really does. And so theoretically, stocks are supposed to keep up with it. But the good news is this, is like investors, like 401k investors and the general public, working people that put money in and get a company match every week, they've been putting money in, putting money in for the dip and the rally. And so in theory, if they did that, like your average long-term 401k invest for retirement person is probably doing great, because since they were buying all along there, they probably have $5,300 worth of shares accumulated over this period of time. So in theory, the S&P has kept up with inflation. Nominally, it hasn't. But then again, it's very rare that anybody bought the peak. I'm sure some people bought in at the peak, and that's another thing. That's like on an individual stock. When an individual stock peaks and then has a sell-off and then eventually rallies back up to where it was, that's where it's met with selling, because people spend a whole lot of time underwater and they're starting to think, well, geez, if I can just get my money back. And so that's why you see sometimes it's difficult to break through a prior high. So anyway, that's a pretty good looking chart right there, though. You know, there's a lot of different scenarios. One is they could break it out, make a nominal new high, and then it sells off, right? That's that's definitely a plausible scenario there, because that's kind of like, well, it's kind of like the Russell 2000. A few years back, it had that big sort of range breakout, and then that was short-lived, and then it sold off. So I wouldn't put it past them to. I wouldn't put it past this market. I mean, it's so close. I mean, you're basically one day, you know, one long range day or a couple of long range days like we had on Monday away from a new nominal all-time high. So that'd be a heck of a. And then of course it's an election year too. So there's lots of craziness going on with that, and the incumbent typically wants a good economy and a good stock market. So there's always that consideration. Anyway, next week is going to be more important than this week. I sort of feel like the first couple, the last couple of weeks of the year, everybody's in holiday mode. The first couple of weeks of the year, everyone's still sort of getting back into the swing of things. I know I am myself. It's hard to get back into the swing of things for the new year. So next week we will know what the reaction to the inflation numbers are, and we'll talk about that. And may see you back at new highs. I think the days are numbered until we get some sort of a pullback, though. See, that's the thing. Quite frankly, I was a little surprised. The past couple of days took me by surprise. There was a nice pivot low, but the that rally on Monday was a real sort of out of the blue type of thing. Basically, with the fact that the market was already sort of due for a pullback. So anyway, I'll see you back here next week, and we'll see where